Good morning and welcome everyone to the Moneycontrol live stream. You're watching the long weekend, but not a good start really coming in for Indian equities. Set for a sideways session ahead of the FOMC meet. SGXT Nifty indicates a gap up opening coming in for Indian equity markets. US markets inch lower in the wake of the government seizure of First Republic Bank over the weekend. Asian shares slide ahead of the US Fed meet outcome tomorrow. And in terms of the FIIs and the DIIs data that we have, FIIs bought shares worth around 3,300 odd crore, and DIIs, they've purchased shares worth around 264 odd crore. So clearly for US market, it was a negative start on, or rather a negative close coming in on Monday ahead of the FOMC meeting, and also on account of the bank seizure, which has been sold to a private sector bank out there. But let us get going and discuss some stocks and strategies today with Prashant Sawant, the co-founder, Catalyst Wealth. Good morning there.
Hey, good morning, Nickey.
Prashant, do you think the short-term uptrend of Nifty remains intact and the market is expected to reach up to the next resistance of 18,200, 18,300 level in this week, especially ahead of the FOMC meet?
Yeah, definitely, yes. If you look at the strength of the rally, now I'll talk about Nifty first and then I'll talk about Bank Nifty. So if you look at the pre-open, that's a little not in sync with what we were looking at SGX. I think we were looking at around 100, 140 points gap up. Currently, it shows around 60, 65 points, but I think it should settle down overall. And it's still a positive start to the week. And I feel that the next leg of rally in Nifty has to get a major contribution from Reliance because if you look at the previous 400-500 points, Reliance has not contributed much. I think it's at a crucial level, and if it breaks out from here, I think Reliance can contribute very strongly. Overall, I don't see any issues, and if there's any dip, we can definitely look at buying because few weeks ago we were very much into a slanting, that is a downward channel. Now we are out of it, we are out of the woods, and any dip can be bought. Positionally, I would say that Nifty spot, which is currently trading somewhere around 18,100, 120 odd, should not break the important level of 18,000. As long as it holds, I think any dip can be bought. But more than Nifty, I think Bank Nifty may show strength in the next 2 or 3 days now. And we may reach near to the previous all-time high, which was approximately around 44,100. We are currently looking at a pre-open around 43,400. And I think today, on a closing basis for both the indices, in spot, the major levels would be 18,200 for Nifty, and for Bank Nifty, it would be 43,500. If we manage to close and hold those levels for this week, I think we can definitely look at a big rally in the coming 2-3 days.
Coming 2-3 days, but what about the strategy today? Because over the, on Monday, there was JP Morgan bought First Republic Bank out there, which is US second biggest banking failure, but the quick resolve to this is probably some solace out there. The second cue that came in is a little bit of caution, which is creeping into the market ahead of a FOMC meeting. What do you think in that perspective? 5 consecutive sessions of gains. Do you think market would halt, take a breather, and then probably decide upon the direction post the cues that we get from the FOMC meeting? How would you play the markets in today and tomorrow, these 2 sessions per se?
Yeah, I think that's a good question, Nickey. We should have a very rational approach. The right word is rational here. Why? Because we have had really good gains. If you look at Bank Nifty, in the past 4 or 5 days itself, we have had around 1,000, 2,000 points. And so with Nifty as well, around 400-500 points. Now we have to be rational and somewhere we have to book profits. But if you want a system to do its job, as in if you want to ride the rally, what would be the best way? The best way would be to keep your exit point, that is your trailing stop loss, I would say, for those who are holding longs, slightly below the previous day low. If you look at the current move for the past 4 or 5 days, neither of the indices, neither Nifty nor Bank Nifty, has touched the previous day low. So if you keep your stop losses, say 20-25 points below the previous day low for Nifty, and say around 50 to 75, 80 points below the previous day low for Bank Nifty, I think that would be a systematic way you are approaching to the markets. You are showing respect, and if there is a reversal, your profits will be booked out. If the rally continues, you will continue to trail with the previous day low and you will still be a part of the game. So I think that would be the best approach, because if you look at any of the news on the US front, whether it's Dow or whether it's Nasdaq, I think both of them have completely ignored all the news. And the rally has only added strength. So I think the best approach would be to trail using the previous day low. If it reverses, your profits would be automatically booked out.
Sure. Prashant, I would want to also check with you your profitable trading ideas for the day. And with that, I would want to understand what do you make out of Kotak Mahindra Bank and if it features into the list. A, because the 3% ROA is the best ever by the Indian bank in any quarter thus far. If you talk about the NIM margins of Kotak Mahindra Bank, they're at all-time high. If you talk about the NII growth, it's the best that we have in the 7 to 8 years time span. Do you think it looks attractive on the chart as well?
So I think, Nickey, first I'll talk about Kotak and then talk about the trading ideas. So for Kotak, I think 1950 spot happens to be a big resistance. We need to close above that. If we close above that, I would avoid an entry for the first 1 hour because there would be a kind of a knee-jerk reaction to the results. So let's wait for the first 1 hour. And if we happen to trade or sustain above the 1950 level, we can definitely enter and keep our stop losses somewhere around 1920 zone on closing basis. And we can hold for targets around 2000, 2020. But let the initial kind of an emotional move settle down for the first 1 hour, and then you can take the decision. As far as individual stock picks are concerned, I think one stock I would like to highlight is on the first time we met, somewhere around end of March, I spoke about RBNL, which was at that point of time around 64 with a stop loss of 60. So I think that from that day, just in a month, from 64 has gone to around 115. It has been a great move, and we happen to catch it almost at the rock bottom. So I think that would have been a really good one for the viewers. Now today, the ideas that I'm looking at are first is ABB. I think the stock is strong, and you can keep a closing basis stop loss spot at 3,370. That is 3,370. Hold for targets around 3,500 and more. I think it looks like a positionally good one. Next one would be AB Apparel, that is AB Fashions. I think this is showing a very good pattern. It has dipped to the previous resistance with a stop loss of 214. One can definitely hold for targets around 240 and maybe more.
All right, Prashant, we will address the stocks and news because there are a bunch of news out there which needs to be addressed. You've already given your 3 profitable bets out there for the viewers up to lap up, but we'll address the key newsmakers before we cut into Prashant again. But Kotak Mahindra Bank, that's clearly the one which is on the top of the stack for me this morning. Net profitability is up by 26%. If you talk about the year-on-year performance, NII up is almost 35%. Provisions at 147 crore as compared to the loss of 306 crore in the corresponding quarter of the previous year. Talk about the asset quality. Gross NPA at 5,768 crore as compared to 5,994 crore. And even if you talk about the net NPA, that's improved. But I would like to highlight one thing which is being said on the analyst call for the Kotak Bank. It's also open to inorganic expansion, including IDBI Bank. So do keep an eye out on this one. Just to reiterate, ROAs, best ever by Indian Bank in a quarter, NIM at all-time high. And if you talk about the NII growth, it's the best in the 7 to 8 years. If you talk about IDFC Bank, there also we're seeing good performance coming in. 6.4% NIM led to 1.4% ROA for the quarter. Ultratech Cement, results are pretty much in line, but debt has also been reduced despite the sharp capex level that we've seen thus far for even Ultratech Cement per se. Adani group of stocks, do keep an eye out on that one. SEBI has probably gone ahead and given that kind of approval for extension of the investigation. Right now, it's not found anything with the investigation that the short seller report has suggested. But do keep an eye out on Adani names, Adani group of companies. Nifty 50 up there for you, holding up for 6 consecutive sessions. 18,100 mark is clearly comfortably sitting above that level for Nifty 50 right now. Let's just see Bank Nifty, where Kotak Mahindra Bank has reported good set of numbers. IDFC Bank has reported good set of numbers. Kotak, Nifty Bank at this point of time, Bank Nifty index per se, 0.2% gains coming in even on that one. So strong resistance, just in case how Prashant was pointing out at the trade setup for the session right now. Auto stocks, these are the one that we're going to be addressing in just a jiffy for you. Auto sales numbers have been encouraging thus far, and the index is holding up for you with gains of 0.2% out there. In terms of sectoral indices that we have, metal, Tata Steel will be coming up with numbers today. And ahead of that, we're already seeing the metal pack shining bright for you. Almost close to 1% of gains out there on the index per se. Talk about the other sectoral indices that we have on the list right now. Nifty Pharma, 0.1% of gains coming in for Nifty Pharma index overall. And if you talk about the other sectoral indices that we have, the entire defensive space, right? FMCG for that matter, pharma for that matter, 0.3% of gains out there. A little bit of IT, that was the next thing in my mind, defense, pharma, IT, FMCG, all of them are holding the neck in green for you with gains of around more than 0.2% per se. Realty index, well, you need to track the gains coming in for that index now. We're seeing strong demand building up, and at least on opening level basis, this index has been doing rather well. In terms of infra too, it's holding up in green with gains of around 0.5% out there. In terms of the advance and declines ratio that we have on the screen right now, you have 42 stocks advancing versus 8 declines right now. So clearly the market breadth is in the favor of advances. Talk about the top gainers and the top losers that we have on our list right now. Eicher Motors is shining bright for you. Auto sales numbers out there. Adani Enterprises, like I suggested, keep an eye out on Adani group of stocks. Hindalco too is trading in green. UPL, Power Grid and Nestle India. These are some of the other top gainers that we have on our list right now. L&T, Apollo Hospital and Britannia. These are the ones also shining in green right now. Talk about the nifty losers out there. Hero MotoCorp, that's down and out for you. Tata Motors, that's down and out for you. Kotak Mahindra Bank, well, the stock has probably given to the selling pressure right now, given that most of the positives seem to be already factored in, but cannot take away from the fact that it was a rather good quarter coming in for Kotak Mahindra Bank. Sun Pharma, Ultratech Cement too is down and out after reporting somewhat inline set of numbers and a lower debt out there. TCS is down and out for you. So clearly a mixed trend emerging out of the markets right now. But I'd like to address the auto sales number because that's going to be the movers out there for, as you can just see the top gainers and the top losers list out there. Maruti Suzuki, domestic sales up by 8.5% year-on-year basis. If you talk about Eicher Motors, Royal Enfield, total sales totally have been up by 18%. And if you talk about Hero MotoCorp, that's the one also a little bit of caution slipping in on that one. Sales below estimates in April. Talk about the total sales, that's down by 5.2% year-on-year basis for Hero MotoCorp out there. Tata Motors, if we can talk about that, probably one of the counters which is, talk about the domestic sales number, it's down by 4%. You would see that reaction coming in on the stock price given that the April numbers aren't very encouraging at this point of time for the month. Down 4% at 68,000 units, 68,514 units coming in for Tata Motors out there. Ultratech Cement, let's talk about that. The cement packed until last quarter, it was a different story when it came to the price hike. This is more of a volume game right now. Talk about the numbers, the inline set of numbers. Realization, almost 2% sequentially, but on expected line. The cost pressures have cooled down. You're seeing that inflationary pressures coming off, but it is just on anticipated ride. And the commentary suggests that there could be a further ebbing coming in on the inflation pressures as the fuel price has dipped. The margin driver, however, will be the raw material cooling, as the management is not hinting at any big price hike. So that's the one which is weighing down on the entire basket per se. You talk about the ACC, you talk about Ambuja. It's just the pain point right now is the price hike. It's no longer, the existing capacity till the time these players don't squeeze that out, they would not go ahead and take the bigger capacities on board. So, amping up the existing utilization level is the key out there. But I'm just going to give in the numbers out there for Ultratech Cement, in terms of what the numbers were as compared to the poll out there, just to give you a flavor of how the results are stacked up in terms of expectation. Revenue at 18,662 odd crore versus the poll of 18,500 85 crore. So in line when it comes to the top line performance. EBITDA at 3,323 odd crore as compared to a number of 3,292 odd crore. So you can see that amount of surpass in terms of the expectation when it comes to the operational performance, right? Margins at 17.8% as compared to the expectation of 17.7%, and profitability to an extent, however, has taken a hit. But Tata Steel, do keep an eye out on that one. It's going to be coming up with numbers today and officially kickstart the earnings season for metal companies. Consolidated basis, what is the expectation out there? Well, revenue is expected to be 14.9% higher at a number of around, lower at 58,962 odd crore as compared to 69,323 crore. EBITDA too, it's expected to be around that 5,755 odd crore. That's the number coming in on the operational performance front, and margins are expected to be at 9.8% for this counter per se. The top line contraction that we're expecting for Tata Steel is due to lower steel prices, due to lower volumes in Europe, and the subsidiary performance, which continues to remain subdued. Even if you see some amount of momentum building in on the Indian steel operations, but the pain point really is the subsidiary performance. Right now, it's holding up in green for you. 0.5% of gains coming in on that one, but that's clearly a one basket, one counter that we need to keep a close eye out on. Prashant, come in on this one. Talk about the Tata Steel or the auto sales number for that matter. What looks attractive at this point of time?
So I think the tire stocks are definitely doing well. If we talk about auto, I think the one stock which is standing out is TVS Motors. It's currently around 1140. I think this can move well. So keep an eye on TVS Motors. I think Maruti is range bound, but they keep an eye on this. Keep it on the watch list. If it closes above 8,700, which happens to be a major resistance, I think this can move well positionally. So 8,700 happens to be a make or break level. But at current levels, I think the stock which is really attractive is definitely TVS Motor.
All right, so TVS Motor is what looks attractive to Prashant right now. But Prashant, what do you make out of Tata Steel? The company will be reporting in the numbers today. Hindalco was also one of the top gainer. Nifty Metal Index is shining in bright, in green today. What do you make out of it? What do you like from the space?
So I think metals are showing strength, and of the whole pack, I think the one which is the strongest is Jindal Steel. But I think for Tata Motors, which is currently trading around 108.5, 109 zone, 111 happens to be a make or break level. So based on the results or whatever news comes in, if we close above 111, I think it can show strength, which can give a rally up to 120. So for me, the make or break level happens to be 111. Keep an eye on this level. If we close above this, that is say today in the afternoon around 315, 320. If we see trading about 111, definitely one can buy this stock and hold for targets around 120.
All right, so one can go for the targets around 120 if it manages to cross that 111 level that Prashant was talking about. But Prashant, thank you so much for taking out the time and speaking to us this morning.
Thanks a lot.
All right, it's that part of the day where we address the fundamental story right now, and there's too much to talk about, right? You talk about bags, you talk about the FMCGs, you talk about the metal companies, auto companies, bunch of them in focus right now. And to take the discussion forward, we've been joined by Aniruddha Sarkar from Quest Investment Advisors out there. Good morning there.
Yeah, hi, good morning.
What do you make out of the entire auto sales number? Hero MotoCorp, for instance, was definitely not doing too well in trade. We also saw some amount of, drubbing coming in from other names, but something like Maruti Suzuki seemed to have reported decent set of numbers. I would like to understand your assessment on the space and what do you like from the entire basket per se?
I think if you look at the auto numbers, one thing is becoming clear, which has been kind of the trend for the last 6 to 8 quarters, is that the urban part of the economy is doing much better than the agri side. And I think that gets reflected in the numbers. If you look at the sales of Maruti, or if you look at M&M and other big players on the passenger vehicle, I think they have been doing pretty good. And I think the outlook also remains to be very, very strong over there. Agri part of the economy, which has concerns, is seeing some sort of a demand slowdown in the auto, basically the bikes and the scooters. And I think that is getting reflected in the numbers as well. To be honest, we are very bullish on the whole auto pack. And I think, if you look at where we stand today, I think from here on, also looking at the order backlog which is there, it gives you a decent visibility that at least for the next 4 to 6 quarters, there is no concern on the revenue growth because of the order backlogs which are there. So I would be bullish on the sector as per se, but yes, more bullish on the passenger vehicle and the commercial vehicle also, apart from the passenger vehicle.
All right, that's the word coming in for the entire auto space per se, but something that really needs a discussion out there will be the cement sector names out there. Ultratech has reported inline set of numbers, but the management isn't really expecting big price hikes to come through, although they have reduced their debt despite the sharp capex that they have reported on account of the capacity expansion that they're undertaking. What do you make out of it right now? And within the space, what do you like?
I think in cement, the period which happens before the monsoons, basically, I can say March, April, May, that is the period wherein the price hikes, if it happens, has to happen. Where we are today, I think we have not seen any price hikes. And I think that is giving you a good indication that there is very unlikely to be any price improvement for the rest of the year. Within maybe in another 30 to 40 days, you'll have the monsoons coming in. So the chances of a price hike is very, very unlikely. So I would say the pricing pressure is going to be a very big concern for the cement industry. I don't see any concern with regard to the demand, because if we are bullish on the whole infra pack, the whole domestic infra cycle, capex cycle, with so many of the large projects underway, demand is not going to be a concern. And also the real estate, which happens to be one of the biggest consumers of cement, demand is not a concern. Overcapacity and price hike is going to be a concern. And I think that is getting reflected in the management commentary also. So margins can be under pressure. So that is, I would say there's some comfort from the raw material prices, which has come off decently from the highs. So pricing pressure will remain as we speak. I would be I would say if one has to bet on that space, it would be better to bet with the big boys, which is so I'll give a disclaimer that we might be owning the names which we discuss. So I would say it is better to be with the big boys like your Ultratech, Dalmia of the world, which have a good presence pan-India.
All right. So something like Ultratech and Dalmia is what suits the requirement out there. But, in terms of the banking space, Kotak Mahindra Bank, ROA is probably the best ever that by the Indian bank in this quarter. Talk about the NIMS, it's the bank has reported the best quarterly numbers when it comes to even the NIMS performance. IDFC First Bank, that's the one that's clearly needs to be spoken enough and more about, because even the asset quality, the ratios, GNPA, NNPA are at 9-quarter low out there. What do you make out of it within the banking space per se? What do you like? And between Kotak Mahindra Bank, which is, I'm comparing, I know the asset size is completely different for both of these banks. But within the space, what do you like, if I may ask? And also the reasons why you like that particular counter.
So just to give a disclaimer before I mention about my view on IDFC, because we have been bullish on IDFC First Bank for a long time, and we have it in all our portfolios also. So I'll say that, when you talk about the two banks, Kotak and IDFC First Bank, I think, obviously they're not apple to apple comparison, but yes, I think the numbers which Kotak reported, they give you that confidence for the whole banking sector, that the sector is going through an extremely upcycle. If you look at the NIMs, the ROAs, I think, that is kind of the highest we have ever seen. I would say there is no concern on the lending growth. I think you will see the banks going after the deposit growth now, because I think that is something which all the banks are now going after. When it comes to IDFC First Bank, I'll say that there's a big kind of a perception change which is happening in that stock, because always it had that baggage of, the old infra asset book. And that was something which used to give it a very low valuation, considering whatever past concerns were there. Over the last 4 to 6 quarters, if you look at the whole growth of IDFC First Bank with regard to all its numbers and parameters, whether it's ROA, the NIMs, asset book, etc., I think it is kind of getting into that shape wherein it can compete with the big boys in the years to come. So I think there's a massive multiple upcycle which is happening over there. And I think the management continues to be very, very bullish about the growth prospects. And I think what they've achieved in the last 48 months is, I would say, extremely, extremely appreciable.
All right. So clearly some amount of, bullishness coming in for Indian banks. Not sure if that's the story coming in for the US banks out there, which has registered the second big failure out there. But if you talk about the metal space overall, that is one which is up for grabs, right? Tata Steel is expected to come up with numbers today. Hindalco is shining bright. Sometime back, there was an initiation report by Nomura on Hindalco with a buy rating out there. What do you make out of this counters? What kind of quarter are you expecting in for metal companies? Sure, you would say probably cost inflationary pressures is something which is probably cooling off, and you would see that on the operational performance. But overall, where do you think the surprise would creep in from?
Overall, I would say sector metals is something which is very, very cyclical and very difficult to predict, with regard to how this quarter or the next quarter and the quarter after that will be. But if I look at where this quarter is going to be, I would say it will be slightly better than the last quarter because, as you mentioned rightly, your cost pressures are down. And also there has been a decent uptick in demand also in different parts of the world. So I don't see any major kind of negatives with regard to the metal sector where we are. Valuations have corrected. There has been a decent amount of the time and the price correction in all the metal stocks for the last, I would say, 4 to 6 quarters. And I think where we are today, if we see the growth cycle internationally picking up, which to my mind is a big question mark, because, if you're talking about slowdown in the US and Europe, China PMI data also not being very encouraging, I don't see the metal as a sector doing very well because metal does well when the world does well. So if there are concerns on the global growth in China, PMI data being very, very weak, then I don't see metal stocks having a good outlook. But yes, I think the worst is already in the price. But I would not allocate any major chunk to it as a portfolio.
All right, so that's probably, I think more of the non-ferrous side of the game has been linked to the performance from LME. But would you also have the same say for ferrous side? Because Tata Steel and JSW Steel, these are the companies which probably do well because of the Indian subsidiaries doing well.
The metal pack, I would maintain my view with regard to that I think we would be kind of the wait and watch in that space without kind of, exposing ourselves over there.
All right, Aniruddha, in that case, we'll just leave it at that. And thank you so much for taking out the time and giving your views out there to the viewers. Thank you.
Thank you.
Right, with this, it's a wrap and goodbye from the entire team who puts this piece together. Thank you so much for watching, and please do post your feedback for us in the comment section below. Follow us on the link at the bottom of your screen, and for rest of the updates, stay tuned into moneycontrol.com and Moneycontrol app.